for Friday, June 21st. Red arrows across the board. Dow down 353 points. S&P down 40. Major move to the downside. Again, based on Mr. Bernanke's hawkish comments. Markets decided to sell off yesterday. Now, we were down in the pre-market about 7 handles. We were already basically oversold. And then markets literally sold off the first 25 minutes, based all day, and around 2:30, quarter to 3, I guess everybody decided to start liquidating their stocks. And that's a big chain reaction. I mentioned about watch the emerging markets and watch what China does. I do believe China is a canary in the coal mine. No question about it. I still believe it. I know we're going to have a big correction at one point in time. We just don't know when. Markets just cannot stay highly elevated like this and just grind higher without some sort of a healthy pullback. Now, this is healthy. The markets are healthy, but as you can see, when the markets move lower, they move very quickly and sometimes leaves you out without a position about being short. So it's a little tough for the intraday day trader if you're not just literally, if you're waiting for a setup, sometimes it doesn't occur because you're looking for that bounce. You don't want to sell into in a hole, basically, and it's a tough thing to do. And a lot of times, if it's too fast for you, I recommend just stay aside and then let the markets come to you, when you feel more comfortable. But we did have a little bit of developments overnight. Now, as you know, the emerging markets and China have been getting really hit hard. Copper has gotten decimated, and we just heard some rumors from a financial press stating that the Chinese government, People Bank of China, they're starting to grow less tolerant of their banking sector, so it started literally really grinding to a halt. So they're trying to help ease the investors' pain. So what they did was they instructed the central banks to do a window guidance with key banks to help unfreeze liquidity. And it's a good step, but what does that tell you? It tells you that China knows that they got problems, and you can't hide it for too long until really the cat comes out of the bag. So again, I do think that the markets, China's going to be a big factor in the correction, and emerging markets, right? I got a great question. What do we care about what the emerging markets are doing? Well, you have to care, because if you have commodity related countries that are getting hit, like let's just say China, which they buy a lot of our commodities and they stockpile a lot of our commodities, and then you have these, they're pulling in the reins on their buying. So now you have these commodities are getting hit, and what else happens? Commodity stocks are getting hit here in the U.S., which actually fuels more selling in equities. And then what happens is then you have these exchanges that start raising margin requirements, which, as of I just saw a release this morning that gold is margin requirements going to go up 25%. So what happens is they have to meet margin calls, or they just sell their stock. So what they do is they take their good assets and sell them for their bad assets. And it's not the right way of doing it, but that's what a lot of people do. And that just creates more selling pressure into the market. So, and then you have the high frequency trading, and then you have, of course, the algorithms, and that just again adds fuel to the fire, and then you don't get that little bit of a bounce that you were anticipating during the afternoon to get short. So anyway, that's the reason why we need to pay attention to what the world markets are doing, because we all are tied, and we all get we all have the backlashes of other. So like they say, if one sneezes, the other one gets a hiccup, or vice versa. But what I'm saying is that we need to really pay attention, because eventually it comes to head, right? So everything comes, and it's like that perfect storm. Now, today is Friday, and today is, I think, triple witching options expiration, okay? Now, what do I think? I think, and again, has mean nothing for trading, but I will be looking out for the clues. I'm looking at probably a bounce, a dead cat bounce today. Shorts looking to cover into the weekend, and then we get that little bit of a bounce. Now, I'm going to show you a bunch of charts. I have a bunch of indicators which I want to show you today. But I'm looking at probably 1605, 1610 in the S&P, and then if that holds, then I think the market's going to be done for a while going up, and I think you're going to have a decent correction in the coming weeks, like I thought. I mean, it just, again, you really don't know until price tells us what's going on. But right now, the markets don't look good, and we did do some technical damage. So let's get right into the charts. First, I want to show you the McClellan oscillator, as we always do, and as you can see here, we are oversold in oversold territory, okay? Negative 78. We're below this line. Let's see what happens. There is more room for selling. And again, oversold is not a buy signal, but we want to keep that in mind for that rip your face off rally, and that is exactly what I call it, because when you have markets going down really fast, they just move up just as quickly as well. So I'm looking for a little bit of a bounce, maybe make that lower high from here right into that negative 30, 40, get that confirmation we need to sell, and then start selling the markets again. Okay, now let's take a look at the yen. And as you can see here, I mentioned the yen did move back. We were up in this area here. We did get that bull flag. We just caught support of the 20. The 50 is just below that. So now let's see if the yen starts to move higher again. Remember, it's inversely correlated to the S&P. Okay, risk on, yen starts to sell off. Risk off, yen moves higher. So just keep that in mind as well. Okay, bullish percent. We had that little bit of a whipsaw rally. We had that little pop up, and then and now we broke back down again. So now we're on a sell signal again in the bullish percent SPX. Now let's take a look at a little bit of the emerging markets. Now I wanted to show you this. This is the world market. This is the Vanguard FTSE All World X US dollars. Okay. Now look at this. This is just makes it really simple. This is the worldwide market as its entirety. And look at what happened. We broke the 200-day moving average. Now it doesn't just go straight down, obviously. So I'm expecting to back test the 200 or maybe even try to fill the gap, but then fail again. And you can even see here a little head and shoulders pattern. Head, left shoulder, right shoulder, and then your neckline right up in here. Okay, now this is not good. This is not good, at least in the short term. I'm talking now. You don't want to see this. This took out the neckline, the 200-day moving average, and fell way below that. So this is not a good sign in the short term that the world markets are actually selling off. Now let's take a look at the emerging markets, like I've been showing you. Look at this drop lower, guys. We have now at the lower end, which I have to readjust the charts for the weekend. This is a really bad sign, and I've been mentioning this way back up in here. This is a bad sign that the emerging markets are breaking down like this. Now, when you have emerging markets breaking down, they're more likely a commodity related. Then you're going to have everything else fall into suit. Now, let's take a look at. We're talking about commodity related. Let's take a look at copper. Look at copper. Now, if that's not getting unnoticed, I don't know what is. That is really, if I was a manager of some mutual fund, I would be really nervous here. I'd be looking to buy protection. If not, I would have been buying protection way up back in here. But you can see, look at this move lower. This is really, really bad. So in the short term, I don't think this is just going to flush down to $2. I do think that it'll probably back test again, like all price action usually does on a chart. They usually dip lower, they really get that push lower, and then they kind of back test everything. So look for copper again for a little bit of a bounce, but this is a bad sign for the economy, you know. Now, if we're looking at copper, let's take a look at gold. Now, gold, we had a great call on the gold here. I said, watch this big flush lower. Look at this 1277. I think gold for now, the bull market is over, and I think it's over for a while, because now we're going to have rates that are rising, and I want to show you the 10-year. Look at that, 2.41%. I think Ben Bernanke's in big trouble. I think he's got a lot of work cut out for him. And if you look at this is, I think that interest rates have bottomed, and I think you're going to see higher interest rates to come going forward. So this is bad. This is not good. And again, this is going to take some time. But once you start getting interest rates back in the high threes here, you know, 3, 3.5, 4, 5. You know, this is he's going to be in trouble. So you can see these rates moving higher right now. It's not much of anything, and I think it's actually a short-term good thing, because if money's coming out of bonds, it's going to have to go somewhere, and it's going to go right now. I would imagine go back into the U.S. equities, at least for now. And then let's take a look at crude oil here. Loving this trade, and I said that's why I said, guys, don't chase. There's no reason to chase. Take a look at this, and you can see crude oil did come back. Now let's wait for a little signal, right? And then we want to take the next breakout out, and that would give us a confirmation that we are indeed moving higher. Okay, now let's take a look at the charts here. All right, now as you can see here, we had some definitely technical damage today. We did break this long-term uptrend line back from November. We took out the 50-day, and we slice through to 1600. Next target is going to be 1570, right up in here. Okay, now not without, I would imagine, with at least a pullback. I personally would like to see the markets really gap down this morning, so, somewhere into that 1570, 1575 area, and then I would be a big buyer looking for a bounce. Otherwise, now the markets are up about 9.5. We'll see if that holds up until the morning session. But again, I would definitely be a buyer if that market opened up. Now we'd have to reevaluate it because we're up 10, 11 handles. That's what stinks about, because all these markets are trading overnight, and when you get these big gap ups, gap downs, and it's a little tough because market's already moving, and once you get a big gap up play like that, you don't want to be buying into resistance and or buying into selling into support on those gap days. But nonetheless, we did do technical damage. We did break this trend line, and as you can see here, we are in the downtrend. Okay, we are absolutely in a downtrend here, downtrend channel. So as you can see, now this is a little too extended for a bull flag, guys, and that's why I said here would have been great. And then we back tested, and then yesterday if we pulled up, then I'd say fine. But it would get a little too long in the tooth for this flag to be a bull flag. Nonetheless, leave it at that for now. Let's just see what happens here. But watch for some sort of a retracement rally, dead cat bounce for options X. I'm thinking right up in here. See that little confluence area of resistance, 16, 17? That's going to be the ultimate top. And I think if that fails, I say goodbye to the upside for a while. Okay, take a look at the spiders. I want to show you. Now, listen, on the longer term, the weekly charts are actually really holding up well. I mean, there's really no damage on the weekly charts at all. But as you can see here, we took the 20 out, we took the 50 out, and we actually took this sideways consolidation of 159.80 in the spiders. 159.80, call it 160, and then we just literally caught this downtrend line. As you can see here, we are clearly in a downtrend channel. Look at the volume, big distribution day we had here. So not looking too pretty. Here's the 30-minute chart of the spiders. Just wanted to show you. Now look at what happened. Big pinch in the Bollinger Bands, looking for a bigger move, and sure enough, boom, we sold off right after the Bernanke comments. And then as you can see here, just want to show you how sometimes it is difficult, even though the markets, you have to kind of close your eyes and just get short type thing without looking for the right way to get short, meaning looking to get some green bars and then short the market. As you can see here, well, look what happened. We held the first 30 minutes, then we sold off for a half hour, went sideways all afternoon, and then around 2:30, quarter to 3, we sold off for the last half hour again. So believe it or not, most of the volume was obviously in the morning, as you can see here, and then a little bit in the afternoon, but really was very, very, very quiet in between. And that stinks, because if I like to see volatility at least roll up and down, where you can get long, you can get short. But when the market just kind of gaps lower, stays flat across the board, and then just breaks down, it's very hard to get short here when the market's already telling you, hey, look, I'm a little bit oversold. So and guys, always follow the trading plan that you wrote, and if it's effective and profitable, definitely stick to it regardless. Okay, here's the diamonds. As you can see here, again, technical damage. We did break the 20 to 50. We broke this long-term uptrend line, and now we're just kind of really actually we took out this horizontal support of 148.65. So I'm looking for a back test of this long-term uptrend line, and then fail, and then we're going to look to get short again. Now let's take a look at the transports, and this is what was really concerning to me. Head and shoulders, right? Here's the bear flag, right? That flag pattern here, and then here's the two flags, right? Broke back down out of the flag. Now that is where now you could say, hey, you know what? This is definitely a shorting opportunity. Now, when the transports are weak like this, guys, this is, again, another sell signal for the market. So we really need these transports to really start really moving to the upside here and start recovering quickly. Otherwise, like I said, I think all bets are off. There's a recipe for a disaster here. There's a lot of indicators, sectors, other markets just pointing at lower prices. Here's the IWMs now. The Russell held up really well. Again, has been stronger than the most of the sectors, and that actually held the 50-day moving average, where the other four did not. So that's something that's at least a little something bullish thing you could actually put on the bull camp here. And Goldman Sachs, Goldman just got really decimated. Yeah, it just literally took out this uptrend line and failed to break out. Held the 20 and look at this. Held the 20 2 days ago, and then just literally sold right off to the 50. I mean, really got hurt pretty bad. So we got to keep an eye on Goldman here and the banks. But as you look at the banks and the XLF, it held its 50-day moving average. And remember, when the yields rise, it's good for the banks. So not doing too bad. But we'll just have to go back to look at Goldman. Here's Apple, and like I mentioned, many weeks, and I don't know how many times I've said Apple is just a trading stock. Stay away. You're going to get an opportunity for lower prices. And sure enough, it's clinging, literally clinging, guys, to the 418. Now, it's options expiration today. So for those of you who are trading Apple, which I know a lot of you do, it's a little tricky today because you're going to have a pinning effect going on with the option. So Apple could be skewed, and you can get a little bit of a rally. But this, to me, is bearish here. We've got downside movement to the downside. And we can see the candles opening up here, telling us the volatility is kicking in here. So I do think that if Apple loses to 418, you're going to see 400. No question about it. And then ultimately, I think you're going to get a test of this 384. And then we would definitely reevaluate it. Again, if you're going to look for it to accumulate, I'd be accumulating Apple in the mid to upper threes. And then, again, reevaluate. I wouldn't put all your eggs in one basket up at that area. Lastly is the Qs. And as you can see, the Qs really got hurt real bad. Again, no help from Apple at all. Apple really heavily weighted in the Q, so whatever Apple does, Qs are going to follow suit. And look at this, broke to 50. Next target's going to be at least this upper area here at $69, and then 68 and a quarter would be the 200-day moving average. All right, guys, that's about it. A little bit more than I anticipated. I wanted to get my point across. I'm going to do a big market analysis on for Monday, and I wanted to make a quick admin note. I apologize. I did the morning call yesterday, and I scheduled my email server. I scheduled it. I thought I scheduled it to go out, but I put it in a saved file, and I made a mistake on that. So I'm sorry about not getting out the morning call. Anyway, have a great day. Enjoy the long weekend, and we'll speak to you on Monday. Take care.